please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a good session for us. So we're up around 1% currently for the Nifty. We're above our 200-day moving average as we speak. So that is definitely a positive indicator, and we have a positive advance decline ratio on our hands as well, which is currently standing at a very steady level of around 4:1 on the National Stock Exchange. Lot of stocks in focus to discuss, and we will be talking about them. But before that, we also have the Fed meet to reckon with, which where the outcome will come out tonight, and we will be reacting to it tomorrow. So that will be something to watch out for. Otherwise, in terms of stocks in focus, we have Bharti Airtel, which is gaining. We have Cipla, which is bouncing back, and something like an Ashoka Buildcon, which is in focus as well. Hi, Prashant.
Ekta, hi. So that bounce is finally there and it's kind of lasting. I mean, I was looking 5 days back, the Nifty high was 10,478. In 5 sessions flat, we basically lost about 430 odd points. So the high 5 days back to the low yesterday, 430 points knocked off in 5 trading sessions. So, I mean, I think, a bounce was coming. We were expecting that last couple of days. We used to get bounces, got sold into. Well, that is not the case today. I mean, the market's perked up, and it's, for now at least, staying higher. 97.90 dot points in the green, 10,222. I just want to make one point. So far, most of the negatives which people have been talking about are all local in nature, which is, weakening political narrative or bank scams, etc. Bulls have, even till very recently, used the strong global growth narrative to push the argument that maybe downside is limited. The question is, maybe is that at the margin starting to change? I mean, you look at news flow with regards to the tech sector in the US, Facebook in trouble, the so-called FANG stocks are down sharply. And it's an important constituent, very large weight as far as US indices are concerned. So I think at the margin, maybe things may have worsened a little bit there, even as we are starting to bounce back up a little bit. We'll talk more about that, but Sudarshan Sukhani of s2analytics.com is with us. Sudarshan, morning. Thanks very much. Your sense of how far more can this move take us to on the Nifty?
Yeah, good morning. Well, in the morning, we suggested going long in the Nifty. It does appear that yesterday we found some kind of support at lower levels. The markets were willing to be buyers there. So this rally could take us all the way to 350, 10,350, at which point, of course, the markets will evaluate again where they want to go. But there is legs in this move, 100, 120 points easily, I think, so be on the long side of the market.
Okay, what would your stocks be?
Well, the stocks are primarily to go and buy. One is Ajanta Pharma, where I think the pharma sector is bottoming out. I have been talking about it almost every day. So today's choice is Ajanta Pharma. Go and buy it. Even Divi's is good enough. So Walkard also. So that entire sector is worth investing, worth taking a positional trade, and of course for today, a day trade. Apart from Ajanta Pharma, we have 2 big shots, Unilever and Infosys, both available for buying. Unilever had a very minor correction. That correction is over as the Nifty starts going up. And Infosys is part of the IT pack, which is outperforming anyway.
These steel stocks, any thoughts, Sudarshan?
I'm sorry, which one?
Steel.
I'm not sure, because see, what's happening is that private banks, FMCG, IT and pharma, these are the 4 sectors that should be moving around and taking this rally forward. So steel is not something that I'm very upbeat on for the time being.
Okay, all right. Well, Sudarshan, we have a couple of Twitter queries. First one is Jay. He has 1,000 shares of Vedanta at 351 and 100 shares of Reliance at 950. Wants to know the way forward on both of these.
Oh, that's easy. Hold on. Hold on to Vedanta, hold on to Reliance. Both are outperformers in their own sectors and also in the broader market. Vedanta is one metal stock you want to hold on to. Forget about steel, forget about other metals. Just stay with Vedanta and you will be doing very well. And the same applies to Reliance. Reliance is a sector by itself. Stay with both the stocks. Why 1 year? Stay with them for 5 years and you will be very well rewarded. But the outlook is cheerful for 1 year also.
Okay, we got a question on Delta Corp. We don't get that very often. Vishesh has 1,000 shares of Delta, which is bought at 280 rupees. Wants to know what he should do. Hold or sell? Sudarshan.
Well, he should sell. You know, the stock is now giving signs of distribution. Small cap stocks will sometimes turn around. That's a different issue. But if the signs are available and they are visible to me, I think he should sell and get out. And the next few months is not going to be good for the mid caps or small caps anyway. So focus only on large caps. Sell this.
Okay, all right, Sudarshan, we let you go on that note. Thanks very much for joining in and taking us through all of those strategies. We have Yogesh Mehta joining in to give us some of his F&O calls today as well. Yogesh, morning, over to you. So tell us what you're proposing both on the index as well as in terms of stocks.
Good morning. Since market has cheered today and opened gap up, even though it was a disappointed day yesterday. So about 10,176 and 10,160 level today, it seems that market can move up to 10,276, which was an earlier swing low last week. So the probability is very high that it can move towards that, because we have an event tomorrow and market trend will be decided post that. So for the day, it seems that 10,275 to 10,280 is achievable. And on the stock specific, we are recommending positional buy are on Maruti first of all. Currently it is quoting at 89.40, 42 levels in the future segment, keeping a stop loss of 88.50. Target could be in the range of 90-100. The stock has been in a pessimism and on the lower RSI for the last few sessions, and now it has given an uptick. Post that, the second is the L&T, which is reluctant to go down in this fall. Currently it is quoting at 1,314 rupees in the future segment, keeping a stop loss of 1295. Target could be in the range of 1355 to 1360. And the third one is little illiquid stock is Repco Home Finance. Currently it is quoting at 585. Stock has given a strong potential, showing a strong indicator on the technical charts, and 584, 585 is the current price, and keeping a stop loss of 568. Target could be in the range of 615 to 620 rupees.
Okay, we'll come back to you for more, but those are trades which on the F&O side are being put out as of now. BEML is pushing higher, but you know, mind you, there is no real new news flow or anything of that sort. It just could be a bounce. I mean, the stock was 1900 plus, not very far back. It corrected to, I think, under 1,000 rupees, got to there. I mean, didn't spend very much time there. So the correction was very sharp, 1,000 rupees plus, and basically this just could be a bounce. It was also in the futures and options banned securities and ban. I mean, so it's not as if you could take fresh positions. I don't know if that has opened up now, but it is. I mean, it jumped a little bit yesterday, and it's up another 6% right now, 1,100 plus on BEML. The big talking point, or the big global cue, is really going to be Jerome Powell, as he chairs his first Federal Reserve meeting. I mean, the two-day FOMC meeting will end later tonight, and market participants are expecting a 25 basis point rate hike. As always, here is CNBC's Steve Leisman with the highlights of the CNBC Fed survey.
Let's take a look at what the market is looking for. Our 40 respondents, 100%. Think there's going to be a rate hike announced tomorrow. 83%, maybe even more importantly, see that second hike coming at the next press conference in June. The median forecaster in our survey sees 3 hikes this year and 2 in 2019. That's not interesting. What is interesting is the next chart that shows you where the risks are. This is a distribution of our responses. So 21 see 3 rate hikes. You can see that here. But all the risk, everybody else who's not at 3, they're at more rate hikes. So a bunch, the second number, 18, are at 4. And you can see there's no risk seen over here. Nobody's betting on 0. Nobody's betting on 1. It's all 3, 4, or 5. You can see that, by the way, when you look at the outlook for the 10-year yield. That goes up. Over here, 285 is the current rate. It's really 290 today, but we didn't change the chart. 317, in other words, we're over 3% by the end of this year, and then 3.5% by 2019. And now another interesting development. Over the course of our surveys, time after time, they have raised their outlook for the S&P. This is the first time since July that for 2018, they've brought it down. Still not a bad outlook, 4% from the current level for this year, 8% by the end of 2019. I'll take that in the current environment. One concern, though, it's not even the Fed. The biggest concern is trade. It tops the list of threats to the expansion. And on trade, 63% say that the president's trade policies are negative for the U.S. economy. 81% say an exit from NAFTA is a bad idea. 75% are concerned about a trade war. And about half, which is a plurality here, say that these steel and aluminum tariffs will cost jobs. And we'll be waiting for that statement tomorrow and see how Jay Powell steers the market towards 3 or 4. I don't suspect, Wolf, it'll be 5.
Okay, well, we will be watching out very closely. The press conference is only going to take place at 12 a.m. our time, so all of us are probably going to be fast asleep. But nonetheless, let's also listen to what market men are expecting from the Fed and its outlook for the remaining year.
I think they're going to do 4 times. They probably won't indicate it tomorrow. They'll probably stick with 3, but they'll do 4. They're running down the balance sheet. You've got a lot of supply coming to fund the deficit. And oh, by the way, the foreign buyers aren't there the way they used to be over the last couple of years.
It's his first meeting, but we had his first speech back in February, and that really set a tone with a market that was pretty negative. I mean, he came out very optimistic, and that might sound good, but optimism from a Fed chair usually means more rate hikes, and I think the market is just really having trouble digesting exactly where this Fed is going compared to the Yellen Fed, and it's a learning process. We're going to learn a lot in the next 24 to 48 hours about Jerome Powell, and I think that could be relief in and of itself, even if it is hawkish, because the market's actually, I think, pretty well priced for hawkishness.
I think that, A, it's the first time at the rodeo, in a sense, on the first press conference. We've seen in the past, sometimes that can be a little bumpy, so I think that's number one. And then I think the bigger issue is the continued focus on short-term rates and what it means for multiple compression across the board, because the tech story, I think, isn't just a specific stock story. I think it's a story of generally you can expect multiples to begin to come down even as earnings rise.
The market is not showing any signs of letting up. I mean, that's a good sign. We've got a triple-digit gain on the Nifty, 10,225. Rajya Sabha adjourned for the day. I mean, so that is sad news from the Parliament, adjournment after adjournment. But real estate index is the top gainer. It's up about 2.5%. The PSU Bank index, if you can put the Nifty indices, sectoral indices up, you'd see what I'm talking about. Yeah, 2 1/3 of the real estate index, PSU Bank up nearly 2%. You've got infrastructure, which is up 1 1/4. Then you've got the Bank Nifty itself, which is up about 1 1/4%. Energy is up about 1 1/4% as well. On the downside, I can't really see very much which is contributing meaningfully at all. I mean, actually, all the sectoral indices are up in the green. So it's a pretty broad-based kind of move so far. And we are almost at the day's high on the Nifty. Let's turn our attention to what's happening in the world of commodities. And Manisha is here, as always, to help us do that. Manisha, morning.
Morning, Prashant. Thank you so much for that. While, of course, we will continue to look at those global cues which will come our way as the US Fed meeting concludes today night. But in the Indian markets as well, you have to look at the agri-commodities. And sugar prices, of course, have seen a knee-jerk reaction in last 24 hours. The latest, of course, has been that the government has scrapped the 20% export duty on raw and refined sugar. Remember, government in the last few weeks and months has been doing quite a bit for the farm commodity prices. And in sugar as well, apart from the export duty being scrapped, we have the import duty, which is levied at 100%. There also is a stock limit on mills on sugar sales for the month of Feb and March. And then apart from that, states like Maharashtra, UP also are talking about increasing the PDS sales. For somebody like Maharashtra, on a monthly basis, it's like 2 to 4 lakh tons of PDS sales that we see, but that can be increased to nearly 10 lakh tons is what the street is talking about. And that would mean that some of this sugar actually could be consumed within the country also. So we are looking at a surplus sugar this time around. 29.5 million tons of an output is what the industry is staring at. And even as the export duty has been scrapped, if you look at the global markets, the prices are trading at around 2-year lows. So even as the cost of production here is around 32 to 35 rupees, the cost of sale or cost of export really comes to 20 rupees per kg. So clearly the maths is not very favorable for the mills there. That, of course, is the kind of yearly output for sugar that we have seen in all of those years. And as you can see, those data in the last 6 or 7 years, 29.5, I mean, is like the highest or a record production that this industry perhaps is looking at. We also spoke to M. Manikam, Executive Vice Chairman at Shakti Sugars, and he also believes that the government perhaps will need to do some more. And at these levels where sugar prices stand, exports clearly is not very favorable or profitable.
The international market is around 20 rupees and our cost of production is at 34. I've been saying the nature of the problem is that we have increased the cane prices too much. So gave an incentive to the farmers to produce too much. So the best solution is actually to reduce the cane price. Probably the best thing is the government of India should take a buffer of about 5 million tons and hold it, because if this is the case, there are areas of farmers, there'll be a shortage coming in the next couple of years. Today we'll be making a loss of almost about 12 rupees a kilo if we were to export.
So clearly, with all that the government has done, it still isn't favorable for the sugar mills, and there are some more steps that are being advised and suggested and need to be taken as well. Aurobindo Gayan now joins us with strategies on that space and more. Aurobindo, what is your sense? Sugar prices have seen an uptick. Is it a good time to start buying here, or would you want to wait for some more steps?
I think we'll have to wait for some more time. I think looking at the production number that we talked about, almost 29 million tons, it is excessively higher, and with such kind of numbers coming in, government has to take some steps. I think last night's step that has been taken is a kind of starting move for the market to stabilize. So I think prices are trading steady. So I think some more weeks time it will take, that market would stabilize, and then probably we can start buying the commodity from lower levels.
Well, that point is well taken. How do you also look at the crude oil prices? 3-week highs on that. The last 24 hours have been quite strong. We are up nearly 2.5% since the New York session and Asia put together. Are you looking at further buys?
Yeah, I think now crude is turning into a little more interesting phase since the band of 59 to 62 is now broken onto the higher side, and we are almost approaching $64 for WTI. And I'm sure we are listening to a lot of geopolitical concerns, production cut, and all these factors are now turning more positive for crude oil. So I think we probably would see a new price range that we have not seen for the last couple of months. So I think in the near term, we might target $65 to $66 for WTI crude oil, and that should be on a positive trend.
And before we let you go, a quick one on the gold and silver prices, because we have seen prices under pressure ahead of the Fed meet. How are you positioning yourself?
Well, for the intraday perspective, I would continue to go short on that. And from the Indian numbers, if I would say, for the April contract, we'll go short at 30,360, 350 levels for a target of 30,000 again. And stop loss should be 450. But then I would strongly recommend that stop loss needs to be placed today ahead of the Fed decision tonight. And I'm sure we might see a gap up, gap down price in gold prices tomorrow morning, once the Asian markets are open. Yeah.
Okay, thanks very much, both of you, for running us through what's happening in that part of the market. We are going to now focus on an exclusive story, which we're going to break. But the market needs, just one-line comment. We're off about 10 points on the Nifty. We were up 104 points or so. We're up 93, 94 odd points. But it's nothing large at all. It's looking pretty okay. We're going to focus on the flash at the bottom of the screen, and this is a deal which has been talked about for a while, but we are now telling you that the Indiabulls Blackstone deal may be announced over the next couple of days or so. We'd gotten you this information earlier as well, and we've got some definitive points. Nisha is getting you that story. She's standing by with more details. Nisha, over to you. Okay, I think we lost the line with Nisha. Let me just read out the lines and we'll get Nisha back for you. So Blackstone is going to buy 50% in the rental business of Indiabulls Real Estate. That is the first news item. The deal is going to be for about $300 million or so. Okay, I'm being told that Nisha is back with us. So Nisha, over to you. Tell us more.
Yes, thanks for that, Prashant. Of course, sources with direct knowledge have shared that they want to close this transaction by end of this financial year, and that's what they're trying for. So in the next few days, we could be hearing about that big announcement coming in. So the construct of the deal is such that Blackstone is looking at buying out 50% stake in the overall rental business of Indiabulls Real Estate. 50% will be retained by the listed company itself. And the total equity funding that Blackstone is likely to do is closer to about $300 million. Now, that's not all, because they will be also taking a part of the $650 million of debt, which is on account of the rental business with Indiabulls Real Estate. So this entire exercise is likely to also reduce the overall debt pile on the books of Indiabulls Real Estate as a listed company. Remember that $1.3 billion could be the total enterprise valuation as per this particular transaction that the rental business of Indiabulls Real Estate can really garner with this particular transaction. So yeah, this deal is all set to be done. Just the final touches are being given to this large transaction, and Indiabulls Real Estate stock will be in focus on that one.
Okay, all right, Nisha. Like you can see, the Indiabulls stock is spiking up now, almost a 5% gain, which is coming in on that one, on the back of that CNBC TV18 exclusive. Well, we need to take a break now, but more on the market technicals. Ashwini Gujral will be with us next to discuss what he's strategizing midweek.